just about 9 o'clock, getting ready to get started. Wow, December 29th already. It is 8:59. We're just about the 9 o'clock hour. Going to get ready to start. We might as well start now. Here we go. 9 o'clock. Thursday, December 29th. Here we are at Thinkorswim. This is the cover page, which you're going to get as soon as you log on. Let's get out of here and see what we're doing today. Okay, like I said, today's the 29th. And tonight, let's clear filter. The 29th, we have 41 companies paying dividends today. Let's see if we know any of those off the top of our head. AA, FSI, CAH, FLR, FRT, KKM, PK. None of these really stand out. You know, nothing like really stand out. Anyway, let's go from high to low and see who's doing what. All right, now today it's Thursday, and we like to incorporate dividends. Not dividends. We like to incorporate what do you call those thingies? We like to incorporate options into our strategies. So let's get back to here and see what we're looking at. Okay. Now we have 41 companies, so let's just get rid of some of these and just go to the ones that have options on them. And I want to do weekly options. None. Nobody has any options today. I hate when that happens. Let's clear the filter. Oh, it's a week. All right. Let's go back and see if we find some weeklies. All right. Okay, so we're in the week of the 29th, so the 26th we didn't have anything, 27th nothing. Yesterday, the 24th, we had 14 companies that had weeklies. And tomorrow we have 2 companies that have weeklies. Okay, for the fun of it, let's see what they look like. Because there's still an opportunity to get them first thing in the morning. CMCSA, that's Comcast, GPS. Is that Gap, I think? I'm not sure. Okay, so let's look at CMCSA. CMCSA. Which is Comcast. I love Comcast. They had a high just last week, December 22nd, at 70.88, and the low was back in January, 53. That's almost a 50% increase on this year. Nice, I like that. There's a nice slow up coming right into July. Go sideways for a while. Then towards the end of October, November, she drops off. And look at this. Right here. November 4th, 5th, 6th, and then you get the president gets elected on the 8th, and this thing just shoots up and just keeps on going. Right to the end of November. Then she basically goes sideways for the whole month of December. So here we are now in the month of December. On the 29th. Now, 10 days ago from the 29th would have been the 15th. So, to get in on the 15th, we would have bought the opening price, the opening bell on the 14th. So, let's take a look at what this thing did from the 14th. 13th and 14th, right there. Okay, so Comcast had a 27-cent dividend. And she opened up, and remember, the numbers we're looking at right up here. It's the open, the high, the low, and the close. So, and this is the 14th. You check the dates down here, the 15th, 16th, 17th, so on and so forth. So the 14th, which would have been a Wednesday, we would have gone in at $69.94. and the high of the day was 70.69. So we definitely made our dividend, our 20-cent target, 27-cent target, and even then some. Okay, so 69.94. That's a 75-cent move. A 75-cent move in one day. So you get opening. And she went up 75 cents. Get out. Why not? Anyway, that one made it. Oh, that's for tomorrow. Yeah, see, tomorrow there's still an opportunity to. Wait a minute, they're paying their dividend tomorrow. Yeah, so you don't want to do that play tomorrow. Because usually when they pay their dividend, they usually go down for the equal amount of what the dividend's going to be. Okay, let's take a look at what it's going to look like tomorrow anyway. We'll do that with another one. GPS. Gap Incorporated. Okay. See what GPS did on the 14th. GPS. There we go. All right, so GPS had a high of 30. Well, actually, had a high twice. Back in March, she hit 29.96. And here, the middle of November, she hits 30.50. And the low for the year is right here, May, second week in May at 17. That's almost 50% move also. I like those. Okay, so the last 90 days, this is going sideways. And on November 17th, which is kind of strange, because here you have election day. Now, you'll notice there's a pivotal point in almost every stock of 2008, which is when the markets all tanked, you know? And we look back and we look at history, big pivotal points. And the one we had most recently is election day. And don't know why. I don't know if this has ever happened before. I might want to get into checking into historical data. 4 years ago, what happened when Obama got elected? I don't know. But when Trump got elected, stocks went two ways. Almost nothing went sideways. They either went straight up or they went straight down. Right here, November 8th. Very next day, 1, 2, 3, 4 up days in a row. It jumps from 26.23 up to $30. And then 10 days later, there's this big, huge drop. Don't know why. Goes sideways for a little bit, comes back down. But we want to look on the 14th. What happened from the 14th? Okay, 14th and 23-cent dividend. All right, there's the 14th right there. She opened up at 25.55. Okay, had a high of the day of 25.90. So yes, it did make its 23-cent dividend mark. So if we got in, if we put the order in the day before, buy at the open, the trigger trade of whatever the opening price was plus 23 cents, we would have been out the very same day. And that's basically what we're looking for. We want to catch that 23 cents and we just want to move on. Let's open up. Ooh, I didn't open them up yet. So let's do that now. All right, the 10-minute. We're going to go to the 10-minute trader. And we're going to open up the members area. Password protected. So if you guys are members, you know what your password is. And if you're not, then you're not. All right, let's open up this. Open a new tab. Open a new tab. And open in a new tab. Let me get out of there. Okay, so this week, this is what our weeklies look like. Okay. CMCSA, 97%. Now this you would have gotten Monday morning. Say today's Friday. However, the stock market wasn't open on Monday. So we got this first thing Tuesday morning. but 97% chance that you would have made the money on Comcast. Let's see what actually happened in Comcast. We already did that, didn't we? See? CMCSA. All right, the 14th. No, you got that on Monday. Sorry. Okay. Okay, so Monday was right here. So I got first thing Tuesday. Tuesday she opened up at 70.80, and the high for the day was 71.32. So that was a 52-cent move on Monday, which is not bad. Had you done that, but you got in on the 14th, which is right here, 2 weeks ago. All right, we already looked at that, so it's no big deal. All right, and we have Oracle, BMY. I don't even know who that is. JP Morgan, Mastercard, JC Penney, Monsanto, Verizon, American Express, AT&T. I know these guys. Why is that? All right, let's get out of there and jump into here. Okay, this is for this week. So these guys, you guys should have already made your money on these. But tomorrow we got one move to make, and I don't think it's a good idea to jump into anything unless, let's check something real quick. All right, tomorrow is the 30th. So the 30th, so tomorrow will be the 30th, would be here. So that would be looking at something in January 13th. All right, 12th, 11th. Okay, let's look at the week of January. So this is who we can look at. All right, so tomorrow we have an option to look at some dividend stocks. Okay, there's Humana, Potash, Aetna, I believe that one is. There's 5 here. Oh, Yum Brands, that's like a no-brainer. We're gonna take a look at them. I believe that's Abbott Labs. You don't know them. But let's take a look at Yum, because Yum is a dividend king. You know, they've been increasing their dividends for over 50 years. Okay, so let's look at Yum. Nice little gap up like that. So Yum has a high of 65, a low of 16. Now that is a big spread. Back here in February, I had a low of $16, going sideways for a while, and then at the beginning of November, this thing shoots up from 38 all the way up to 60. That's almost an 80% increase. That's a huge increase. Actually, now she's at 63. Okay, she's at 63, and in 10 days, 10 days would be the 13th, so in 8 days, this thing's going to be paying out a dividend. Okay, it's going sideways for a little bit. And to me, this looks good. But this is not the only deciding factor I'm going to have. I want to pull up a couple of other charts. Okay, look here to this dividend software. Put in Yum here. Hit go, and let's see what Yum looks like. Oh, this is almost a no-brainer. Look at that. Look at these ones everywhere except for 2015. Took 16 days to hit that. So we're looking at an average of between 1 and 2 days. Let's look at the other numbers. Okay, it closed at 63.72. The high was 66.13. The low was 43. This is over the past 52 weeks. So the last year, this is what these numbers look like. Now, she closed at 63 and had a high of 67. Now, they have a 1-year target of 67, which is higher than all these numbers. So we do have the room, the space to collect this 36-cent dividend. And that's all it is, just 36 cents. It's not a lot, but the yield is 2.7. Now, I may have told you before, I don't invest in anything unless it's 2% or higher. So I don't want to go in anything lower than 2%. Now, there are some exceptions. And when those exceptions come, I'll let you know what those exceptions are. Okay, so this piece of software says this is good because we're looking at, less than 3 days. All the numbers here are all working out. And look at this, a 30-day average volume is 4.4 million shares. And that's a lot of shares to be trading on average on a daily basis. Now I want to jump over to take a look at Yahoo Finance and find out how they have performed over the last 10-year period. Because I want to see a steady uptrend. Like if I'm holding this thing for another 10 years, I want to make sure it's going in the right direction. So here's a 10-year chart. And 10 years ago, Yum Brands was at $30. Okay, so she went sideways for a few years to 2010. In 2010, she had a nice, slow, steady up climb increase. And she hit right around 81 bucks, it hit a high of 81. A couple of corrections, a little bit of profit taking. So we can basically call this like a sideways movie because it's not huge and it's not, nothing great. But right now she settled at 63. Okay, so it's at 63 now, and 10 years ago she was at 30. So it would be safe to say that maybe in another 10 years, this thing may be higher. Okay, because everything looks like it's going up, and that's nice. I like that. Okay, now we have one more piece of software to take a look at. Here it is. The second piece of software that we have. We put in Yum. And we hit plot dividend, no data. And why is that? Okay, that's because the dividend is 2 weeks out. The 30th, so 2 weeks out from the 30th would be the 13th. Correct? Correct. There we go. All right, so there we go. All those ones. In 2015, they had 16 days, and the average, okay, average looks good. All right, first thing I want to do is click on the average so I can get rid of that blue line. Okay, so what is this saying we're going to do? This says I buy it 10 days prior to, and coming up to the dividend, she might go down a little bit. Even through the dividend, still go down. Hit bottom, and then a nice steady uprise for the next 90 days. Okay, that's good. I like to get out within 1 day, get my 36 cents, and just move on. So, that's not what I wanted to see. All right, so far these things all looking good. So, let's make a trade. We're going to make a trade, and we're going to do Yum, Y-U-M. We want to get rid of this. Okay. Now I want to do this one because it says 1 day, and I want to own it tomorrow. I don't want a single. Well, let's look at single for a second. Now, the last trade was 63.63. So the at the money. Now these numbers are going to change first thing in the morning. So as soon as the market opens, all these numbers are going to be different. So when you're selling an option, sometimes it's not a good idea to do market on open, because you got to give time for the market maker in order to make a decision on what he wants. What he wants his numbers to look like. All right, so if we're looking at 60.63 as being the last trade, and the market maker is going from 60.63 to 60.90, that's kind of like a big spread. That's like a 17. Yeah, it's a 17-cent spread. It should be a lot closer, like a 1 or 2 cent spread. But these after hours, so you really can't get a good idea. So if I was going to do a single trade, I might do this one right here. Sell a put. Okay, 13 cents. It's not a lot, but 13 cents from 63.50 means I would have to buy it at 63.50, and my break even would be 63.37. Okay, the last trade was 63.63. If I sell that, I bring in a credit of 115. However, look at what it's tying up. It's tying up $12,000. Okay? So remember that. It offsets my buying price. So instead of paying $63.63, which is what the last trade was, we're collecting a premium of 13, taking the 13 off of that, and it's settling somewhere around 63.37. But in order to do that, I have to put up $12,000 in order to collect $115. Let me show you something a little bit different. Let's get out of there. And let's do a vertical. Okay? A vertical spread. I might do this one right here, the 63.50, 64. All right, I'm going to collect 27 cents. However, the 27 cents I'm going to collect, if you subtract that 27 off of the 64, that's going to put me at 60.63. So my break even will be 60.63 or 60.73, which is 10 cents higher. However, by doing that, I'm collecting $240. Okay? In order to do that trade, I have to put up $230. So that's like 100% return. I'm putting up $230. They're giving me $240. However, I have to buy the stock at 64, which I don't know, doesn't really work for me. So let's get rid of that one. If I do this one right here, I'm getting an 8-cent credit. Now, 8-cent credit is not really worth doing, but let's take a look at the numbers. Okay. Right now, the stock is at 60.63. My break even would be 63.42. That's a lot less than what it is now. So that might be worth it. Now, I'm collecting a credit of $50. That's not a lot of money. However, I only have to put up $420. Now, $420, $50 would represent 12%, like a 12% return, I think, somewhere in that area. That's just a quick guess off the top of my head. So if the stock stays above 63, see where it is, 63.50, which is right here. See where my cursor is right here? If the stock ends the day above 63.50, I collect the $50 and just be on my merry way. Is it worth it? No. To me, no, not really. Because why do I want to put up $420 just to collect 50? I mean, granted, I would like to have gotten the 80, but the commissions is $30. The commissions is almost the exact same amount as the profit, you know. And if I sell it, that's another $30 out, which means I'm only making $20. I'm risking a huge amount of money, which is 83. See the net result buying. If I buy it all cash, it's $83,000. On margin, it's $41,000. Is that what I really want to do? No, I don't think so. So we're going to pass on this one, so it's not worth it for the day. So let's get rid of that one. And let's take a look at what's available for next week. Okay, so for next week, I think this one right here might be a good one. 63.50. So that one. All right, they're going to give me an 18-cent credit. Now, do I think it's going to stay above 63.50? All right, 63.50. All right. Now do that. They're going to give me an 18-cent credit, basically, meaning I'm going to get a $150 profit, and I have to put up 320, which is which is a little bit less than 50%. Let's say it's 45%. So you get a 45% return. I'm going to collect $150 right off the bat, and by next Friday, which is 8 days away, if this stock stays above 63.50, then I make that profit and I don't have to buy the stock. Okay, but if I do have to buy the stock, my break-even point is 63.32, which is a lot less than where it is now. Now, the reason why we're thinking about buying this, because we know, number one, it's a dividend king and they increase their dividend payments every year. Number two is that the software shows that it does make a move the very first day in order to capture that dividend. Okay. However, the stock has a tendency to go down into the dividend date, but bounces back up after the dividend date. So you got to weigh your pros and cons. Right? Do I want to just disregard this? Jump and buy the stock? Let's see if we buy the stock at 63. At the current price, 63.90, and we sell off at 64. Okay, this is 38. So if I bought it as it is and I sell someone the right to buy it back from me at 64. All right, see, if I buy it now, it's a 63.90. That's going to cost me, well, let's get the calculator out. Okay. 63.90. Well, let's say we buy 1,000 shares. Or 500 shares. Might be easier for some people. That's $31,000. Now, if you're going to buy it on margin, it's going to be around $15,500. Okay, because margin is twice as much, is half as much, twice the amount of shares with the same amount of money. Okay, so that's 30. Let's round it up to 32,000. Okay, so we're buying 500 shares, $32,000 at $63.90. Okay, we're going to sell we're going to sell the option for someone to buy it from us in 8 days. See this? 8 days at 64, which is 10 cents more than we paid for it, for 38 cents. Okay, so we're collecting 38 cents per share. Plus, we're going to gain another 10 cents per share here. So that's 48 cents. So 48 cents times 500. Let's do this. 48 cents times 500 shares. And that's going to be equal to 240 bucks. So for 240 bucks, I'm going to divide that by the 32,000. And that's going to give us a return of about 1% for 7 days. I don't know. Is that good or bad? Not quite sure. Okay, that's 0.75%. That's not good. I'm not excited about that at all. Okay, but if you did it on margin, it would have been 1.5%. You take that and multiply it by 2. You get twice as many shares on margin. So you get 1.5%, which is not bad. That's like 500 bucks. Not bad. All right, so let's get out of here. Let's go back over to here. So that's Yum Brands. Now, if we do the vertical, the 63, 64. Now we said we didn't like, we tried this though earlier, but we said we didn't like it only because the software shows it going down coming into the dividend. Now the dividend's 10 days away, which, let's go back to, yeah, the 30th would be here. 5 days. This is the 13th. Okay, well, that's what that is. So let's look at some of the other ones. So Yum Brand looks good for several reasons. Number one, it usually makes its target within the first day, the first 1 or 2 days. All right, we're only looking for a 30-cent move. Okay, Yum Brand. Let's see if we can find Yum. Yum's not there. It might not be on these. Yeah, Yum's right there. Okay. Yum moves 1.07% per day. So that's 60 cents on average. Okay, it's a $63 stock, 63.84. So she moves an average of 1%, which is 63 cents. And she's a 30-cent dividend. So if she moves an average of 1% per day, and it's a $60 stock, then it's very easy for it to reach that 30 cents. So you jump in there, get your 30 cents, and get on out. If you want to play the option, because options, hey, they're great. You know, you buy the option. Let's go and change this. I'm going to show you something that might be a little complicated for you guys, but all right. The delta, the gamma, the theta, the vega, and the bid and the ask. The bid and the ask, you know what those are. Okay, the delta, the gamma, the theta, and the vega, those all represent something else. Now, the delta represents the amount of movement in direct relationship to the stock price. What does that mean? Okay. A 40 delta, which would mean every time the stock moves up $1, the option price moves up 40 cents. What does that mean? Okay, so right now you can buy this one at 41 cents. If the stock price goes up $1, this option is now worth 80 cents because it goes up 40 cents for every dollar. See that? Now this stock has a tendency to move 1% a day. 1% on a $60 stock is 63 cents. So it has an average of just a little bit less than $1 to move. So you can almost double your money by buying this option here. Now, if it moves up 30 cents or 60 cents, that would be equivalent to right here, doubling your money. So the 63.50, if you bought the 67, it had a 54 delta. So if this thing moves up $1, 60 cents, this thing's going to move up somewhere around 40 cents. You see that? It all comes down to math. But anyway, let's see if we have any questions. We're halfway into the show at the moment. Let's go here. And we have no questions so far. All right. It makes my life so much easier when I have no questions. All right, so where were we? Okay, so that's Yum Brands. That's one of them that we're looking at. Who else are we looking at? ABBB. Okay, EOG, Humana. Let's look at Humana. Or Potash, HUM. Okay, HUM. Humana, they do insurance, don't they? But Humana, they have a big advertising company on TV. I don't know. Anyway, Humana has beginning of December the high of 216. In July, mid-July, she has a low of 152. the last 30 days, coming right out of the election. Let's go back one day. All right, the election. Remember I told you a little bit earlier, a pivotal point in time? The biggest pivotal point in time is the stock market crash back in 1929. That's the biggest pivotal point we had. Since then, we had a lot of other days. You had 1987, you had a correction then. 2000, you had the tech bubble. 2008 is another one. Well, the newest pivotal point, the election. Donald Trump gets elected. What does this thing do for a month? Just about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 up days, 4 down days. That's pretty good. 3 up days, down day. 1 up day, down day. 2 up days, down day. 3 up days, down day. 4 up days. That's what she went. She went from 174 to 216 in like 2 or 3 weeks. 1, 2, 3, 4 weeks. The 18th, the 8th of November, not even a month. That's a big move within a month. Then from there, 4 down days in a row, then she's been going sideways. This is where we are. 10 days from now, she's going to pay out her dividend. You want to jump in and grab some option plays? Let's take a look at what Humana has. HUM. Okay, so let's go to HUM, the weekly. Let's do the spread. The spread always pays a better return, and you have some protection. All right, right now she's at 202. There you go. Look at that one. 202.92. Now, if you sold at 200, 202.50 for a credit of 85 cents. Okay, if the stock price goes down, you have to buy it at 202.50, which is not bad because she's at 202.92 right now. So if she stays the same or goes up, by the end of the day tomorrow, okay, she can go up, stay the same, and go down a little bit, and you'd still make money. How much money are we going to make? Oh, let's take a quick look. Okay, confirm, and tells me what we're going to put up. Okay, so if I sell 10 of these contracts, I'm going to walk away with $820. In order to do that, I have to put up $1,600. It's not a lot of money. $1,600, that's a 50% return. And the stock goes up, down, up, sideways, or move down a little bit, and I'm going to make money. Is she going to go down to 202.50? I don't know. I honestly couldn't tell you. She's got a dividend coming up, so the software. Well, let's take a look at the software because we haven't looked at that yet. So let's quickly go take a look before we make any decisions here. Okay, where's HUM? HUM right here. 205. The dividend's 29 cents, which is crap if you ask me. Look at the yield. The yield is terrible. Terrible yield. The 20-day moving average is 2.39. Okay, that's a big move. That is so big, I want to find out. Okay, 205 and 2.39. 205 multiply to, what was it? Uh, 2.39. 2.39%. That's almost a $5 move every day. That's awesome. Okay. All right, she gets like a $5 move every day. All right, so you got. Let's take a look at the software because we didn't look at it. We just looked at that. Okay, so that's what Humana looks like. The dividend's 29 cents. The yield is 0.56, which is really terrible. Double dividends. Look at this. DOS, dividends on steroids, 81%. I would do that, 81%. Double dividends, I would do that one too. So it moves up and down 100% of the time. Love it. 95% of the time makes dividend capturing. Okay, love that too. All right, so let's go here. And let's put in HUM and hit go. Oh, crap. Okay, Humana's only has historical records of 5 years of dividends. It's got ones. All right, so she closed at 204. The high of the year was 217. The low was 150. Kind of a big spread. Okay, they had a 1 year target of 220. The dividend is 29 cents. The yield is 0.5, which I don't like. But let's look a little bit deeper because you get straight ones. Oh, year number 6, 1.4 million shares. And let's go. Let's see how she looks this way. All right, put in there. Oh, 13th. When was Yum doing it? 12th, maybe. Wait a second. Hold the phone. Why is Humana showing 10 years here, but on the other software? Let's quickly take a look at the 10-year chart. See what that says. All right, the 10-year chart from Yahoo Finance shows them paying dividends all the way back to 2011. 11, 12, 13, 14, 15. Wait a minute. Yeah, 2011. 11, 12, 13, 14, 15, 16. 6 years worth of data. Okay, so anyway, let's go back to where we were. 10 years ago, Humana was at 55.50. Okay, now, 10 years later, she's at 200. To me, that's a great play. Okay, so the 10-year chart looks good. This software, I don't know why those dividends are popping up when they didn't show it on the chart. All right, I'm gonna have to take a look. I have to get in touch with the who's that? The programmer made it to find out why is that showing when it didn't show on the other one. So she looks good, basically going sideways. I don't know. You know what? To be totally honest with you guys, I'm going to have to pass on this. And I'm going to tell you a couple of reasons why I'm going to pass on it. Okay, although these numbers here are 1, this software here is showing some missing data. Okay, 2007, 2008, 2009, 2010. Come here to the 10-year chart. Look, no D's down here. Okay, so they didn't pay in 7, 8, 9, 10. But why is this software showing it did? That I don't know. Plot dividend is not showing. Plot dividend, no data. That's not right. Something ain't copacetic here. All right, let's find out. I'm going to show you something that I usually don't show people. Where is... Yahoo Finance. Let's go back to Yahoo Finance. Well, let's put Humana right into here. HUM. There we go. And see what Yahoo Finance says. Okay, historical data. Let's find that. Now, I want to look at dividends only and go. Now, that's interesting. There they are. Okay, so I want to see a little bit more. apply, and let's see what they look like. It's going to take a while for this thing to populate to find out what we're looking at. So we're looking at all the dividends from December 29th, 2000 to December 29th, 2016. Yeah, they don't make me happy, but they are increasing. 29, 28, 27, 26. How much further do we have to go? Yeah, to 2011. There aren't any more. Well, imagine that. So they start off with dividend and they're only increasing 1 cent per year. Not a lot. That doesn't make me happy, but they're still increasing. All right, let's get out of there. So I'm not going to do this one only because too much unsure data. Would have been a great return, but when there's no exact data, it makes me a little awkward. All right, let's check and see if we have any questions. None. Gotta love it. I love no questions. Makes life go easier. All right, so we're going to basically wrap it up and go back to the marketplace and see what we're looking at. Okay, so for tomorrow, you don't have a lot to choose from. All right, you got Humanity, you got Aetna, you have Potash, ABV, Yum, ABT, WFM, TRN, and then you have EOG. Those are the only weeklies. These are just weekly options. Now, let's get rid of this. Clear the filter. And look what you got to choose from. You got 12 on Monday. Okay, you have all these guys on Monday to pick from. I don't know which ones has options and which ones doesn't, so I really couldn't tell you. Tuesday for the January 10th, you have 7 more companies. On Wednesday the 11th, you have 29. Let's bring this up so you can see them better. All right, so you get 29 companies. Thursday the 12th, you get another 12. And Friday the 13th, there's only 3 to choose from. Well, yeah, it's quite a bit of companies, so you take a look at all of them, find out which ones work best for you. If you're a member of the 10-minute trader member, if you have your membership, then just go ahead and take all the stock symbols one by one, put them into the chart. Put them into here. You can put as many as you want in here. TF, IBM, MSFT. Who else we got? www, and just hit the go, and what it does is it populates, and from here you can put as many as you want in here, and then you just dissect them one at a time. Okay, we don't really need to see who they are. First off, missing data, so we get rid of that one. Missing data, get rid of that one. Missing data, get rid of that one. All right, the rest look good. Drop it down a little bit further. And then you look at the yield. Oh, nice yield, nice yield, nice yield. Love them all. The dividend, not bad, not bad, not bad, not bad. What do we have over here? Let's slide over a little bit. Come on. I'm not sliding. Let's make this a little bit smaller. All right, she's not sliding. Anyway, take a look at the numbers. Everything looks good. And then from there, you just pop onto the chart. What does this chart look like? The 10-year chart. We already seen Yum, so we already know what that one looks like. All right, we don't need to see it again, but she's going to pop up. And there she is. 10 years ago, this company was down here at 30. Now she's at 63. Gives me an indication, another 10 years she might be higher. Not a guarantee, but just a slight indication. Okay, let's get out of there. Okay, we don't need that one. This one, unfortunately, you can only do one stock at a time. Okay, IBM, plot chart. It tells you how the stock moves within that 90-day period. Well, those are all you guys. You got 10 minutes left to go. We're going to be signing off. If you guys have any other questions, just let me know. put in the chat box, send me an email, one of those. Other than that, this is James from the 10-Minute Trader. Jump on in, ask questions, get your questions answered. If you have any concerns, let me know. But we're out of here for today. You guys have a great day, and we will see you